Okay, a very good afternoon, ladies and gentlemen. Welcome to the first weekly market review for the month of December. I think last week was a very good week on the stock market, and I heard our good friend Mr. Gerald Wong is traveling already. How are you, Gerald?
Hi Sunny, hi everyone who has joined us at the weekly market review this week. Yes, so we are in the first week of December, start of the holiday season, and also being quieter for the markets. But it's also good news for investors because we have seen the US market, the Singapore market doing fairly well last week. So I'll share more about some of these updates in today's weekly market review.
Yes, indeed. We have a very good rebound on the US market last week. We see Nasdaq up 4.9%, and the Singapore STI index also firmed up above the 4,500 level. And we do see some early inflows into the REITs with the overall macro view that we are likely going to see a rate cut this month. So I let Gerald take us through some of these details that you should look out for.
Sure. Thanks so much, Sunny. So, disclaimer before we start that today's sharing is not tailored to your investment objectives and risk appetite and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources and investor education programs. So we saw global markets rebounding in the past week. S&P 500 was up by 3.7%. This was led mainly by tech stocks, where we saw the Nasdaq having a very strong bounce of 4.9%, like Sunny mentioned earlier. And in Singapore, with the improved sentiment, we also saw the STI going back up above the 4,500 mark, so 4,524 points. So what is driving the bounce in the market is really driven by this rising rate cut hopes. If we look at the upcoming December meeting, the probability of a rate cut has now increased to above 80%, based on what traders are pricing in. So this is a sharp reversal from where we were just 2 weeks ago, where the probability was actually less than 50%. So this would show the change in expectations. If I look at the group of columns at the left-hand side, what we see here is that now the probability of a rate cut in December is above 80%. Where it was just 1 week ago on the 21st of November, if you joined our weekly market review last week, like Sunny mentioned, it was at above about 70% then. 2 weeks ago, it was below 50%. So the expectations have increased around the rate cuts, and that is driving the bounce in the market. So with the rising rate cut hopes, we see a decline in the bond yields. This is the US 10-year government bond yield falling below 4%, with the rising expectations of the rate cut. If I look at the 1-year US bond yield, now at 3.6%, down from about 3.7% just 1 week ago. So I mentioned earlier the STI has bounced together with improved sentiment in the market. We see that the REITs are having a recovery in terms of the share price with the rising rate cut hopes. So amongst the top performers in the past week, we have Frasers Logistics and Commercial Trust that was up by 5%. Likewise, I see amongst the other big gainers in the STI last week, also some of the other REITs. Okay, in terms of the worst performance, only a few stocks that had losses in the past week, but the losses were not significant. And we see here most of them having just a 1% decline. So the name that I wanted to share more about today is Frasers Logistics and Commercial Trust. We saw earlier that it was one of the top performers in the STI last week. It's also one of the REITs that has recovered very strongly from the April lows. So we see here in April, it went below 80 cents per share. And then since then, it has recovered gradually and now at 98 cents per share. So for those of you who are not familiar with Frasers Logistics and Commercial Trust, it has 113 properties valued at 6.9 billion Singapore dollars. Okay, these are mainly logistics and industrial property, some business park assets as well, and office assets representing less than 5% of its portfolio. Okay, what we see here in terms of the mix of the assets, the logistics and industrial assets are doing relatively well with an occupancy rate of 99.7%. But it is really the office occupancy rate that is slightly lower at 86.1% and bring the overall portfolio occupancy to 95.1%. So how did it do in the most recent earnings? We see here for the second half fiscal year 25, which is the 6 months ending September 2025. The revenue actually went up slightly by 3.7%. The net property income went up slightly by 2.2%. But because it's still facing higher financing costs, so that brought down the distributable income as well as the DPU. Okay, I mentioned earlier the mix in terms of the occupancy rate, where the logistics and industrial assets are doing better compared to the commercial assets, and that is driving the occupancy rate at 95.1%. Okay, we can look at the divergence in terms of the assets across different regions as well. So in Australia, Europe, and UK for the logistics and industrial assets, the occupancy rate is at 100%. But in Singapore, it's at 91.6%, even though we have seen an improvement in the occupancy rate in Singapore versus 73.5% as of June 2025. Okay. Across the commercial assets, likewise, it is the Singapore assets where the occupancy rate is lower. We see here that at Alexandra Techno Park, the occupancy rate was at 77.9%. And that once again dragged the overall occupancy rate, even though it has improved from 74.3% as of June 2025. Okay, in terms of the rent reversions, overall positive rental reversions of 7.1% in the most recent quarter. We see very positive rental reversions in Australia, but in Singapore at 12 South, that is where the rental reversions have been slightly lower. And likewise in Singapore, at Alexandra Techno Park, the reversions were negative as well. So that brought down the overall portfolio reversions to positive 7.1%, even though the Australian logistics and industrial reversions were very positive. Okay, in terms of the balance sheet of Frasers Logistics and Commercial Trust, we see that the cost of borrowing is at 3.1% on a trailing 12-month basis. The aggregate leverage is at 35.7%. That has been slightly lower compared to the previous quarter. Okay, so this summarizes the DPU. I mentioned earlier that the DPU is down versus the previous year. So what we see here is that they are gradually reducing the capital distribution. At the most recent quarter, the most recent half year, it was at 0.26 Singapore cents. That is to allow the REIT manager to preserve the debt headroom for growth opportunities while maintaining the near-term distribution stability. Okay, so we see that on a DPU before capital distribution perspective, effectively, it was at 2.69 cents in the most recent half year versus 2.52 cents in the previous half year and 2.57 cents from a year ago. Okay, in terms of the guidance that the company has given, barring any unforeseen circumstances, the full year FY 2026 capital distribution is expected to be lower than the second half of second half FY25. Okay. And also they mentioned that 75% of the management fees are expected to be paid in units for FY 2026. Okay, so at this point in time, Frasers Logistics and Commercial Trust is trading at a price to book valuation of about 0.9 times. Still one of the REITs that is trading below 1 times price to book, but it's above the historical average. Okay, in terms of the dividend yield at about 6.1%, which is close to the historical average of Frasers Logistics and Commercial Trust. Okay, so in terms of what to look out for this week is the start of a new month. We have the start of applications for the Singapore Savings Bond. We have a 6-month Singapore T-bill auction this week. But apart from that, we are also looking out for the PC price index data in the US to let us understand the inflation trends better. Okay, so with that, I'll hand over to Sunny, who will share the technical analysis with us.
Okay, thanks, Gerald, for the updates on the Singapore markets. And ending on that note on what to look out for next week, just want to remind everyone that that the economic calendar on the US side is a bit jumbled up. So we are going to see the core PCE price index data for the month of September this week. And the non-farm payroll data, the latest one, will be pushed back to 16th of December. So with that mix up in the economic release on the US side, we do foresee some turbulence or some sort of volatility in the market in the month of December. But having said that, based on seasonality, December is usually one of the positive months, gaining around 1%. So I am still pretty sort of a positive going into the rate cut decision that we are going to see this month with the probability at around 80+% now. Okay, so I believe the December month will be constructive for the markets. And back on the STI market, we see that Gerald touched on the STI up 1.2% last week. And this was led by Jardine Matheson, which was up 5.6% after they provided their third quarter business updates. And that was very in line with expectations, and the profit guidance was unchanged. There was also notable gainers like Frasers Logistics that Gerald went through, as well as Jardine Cycle and Carriage with Keppel, also gaining more than around 4% and above. So those are the key index stocks that lift up the markets. And with the rate cut in mind this month, I do see that there are some inflows into some of the REITs, because with the lower rates, the REITs are the main beneficiary of the lower rates that are coming. So back on the STI index, we do see some pullback in the month of November. That was due to some general market sentiments of overvaluation in tech stock, but that is already in the rear view mirror now. And STI has firmed up to above the 4,500 level, which is a very good sign. That 4,500 level is now the green line that you see here, with the 20 days moving average being the pivot of where the STI will likely trend going into the month of December. So the resistance, we are still looking at the previous year-to-date high on 13 November. That is 4,575 points. And that also, I think, coincides sort of nearby with the upper bound of the Bollinger Band at 4,586 points. So that will be the resistance level to watch out for. Nearer to the 4,006, we need to have a closer look to see if we need to sort of take some profit and market has been overextended. On the support side, we do see very strong support coming in at the 50 days moving average in blue, now coinciding with the low bound of the Bollinger Band around the 4,430 points level. So 4,430 and 4,580 would be the range that we are looking at the STI moving in the month of December. Looking at the technical indicators, we can see that the MACD is showing signs that the negative momentum has been subsiding in the last 4 trading sessions. And it looks like a crossover might happen this week on the MACD indicator, thereby trigger another sort of upside movement if the crossover happens. So do take a close look at that. If a crossover happens, we would likely test the 4,575 points level. The RSI, the latest reading today at 61 points, is also sort of right where crossing up above the 14 days RSI moving average, giving another signal that there could be uptrend momentum piling up or building up in the STI index, and hence for this week, I think we will likely move up on the STI index going into the rate cut decision that we are going to see this month. So likely going to be a positive month for STI index. Stay invested, and if there's any opportunities, do look out for them. And maybe the REITs could be some of the beneficiary when the rate cut announcement was announced this month. Next, let's move to the US indices. So we see a very strong rebound at the last week of November for the three major US indices due to I believe the over concerns about AI valuations. So that has already rebounded up, and also on top of that, the rate cut decision also boosted the equity markets. So you can see that most of the US indices rebound more than 3% last week, with the Nasdaq, tech-heavy Nasdaq jumping 4.9%. So for the Dow Jones Index, we have cleared both the important pivot level, the 20 days moving average and the 50 days moving average in blue, around the 46,700 and 47,000 psychological level. We are now going to move up into the year-to-date high again at 48,431 points, which is the year-to-date high that is higher than the current upper bound of the Bollinger Band at 48,322 points. So near-term target in the next few days for this week, I think we should be targeting the 48,000 level to see if we can reach that level by Friday, okay, this week. On the support side, we can see that the market that has pulled back a lot in November have already challenged the 100 days moving average and the low bound of the Bollinger Band, now around the 45,800 level. So that is where the key support still is. And that range bound movement for December will hover around this level, 45,800 to 48,400 points level. These are the key levels that you need to watch out for. On which is the direction you will most likely go, according to the MACD indicator, we do have a positive reading already last Friday, and that means that this could signal the start of a new uptrend. So I will not be surprised if we do see a higher year-to-date high for the Dow Jones Index in the month of December. For the RSI, we have also crossed above the 14 days RSI moving average at 51, the latest RSI reading at 59, each 1 point short of the 60-point reading, which indicates that there's very strong, healthy momentum in the Dow Jones Index. So for the Dow Jones Index, we expect it to go up. We expect it to test the 48,000 level this week or so. Next, let's move to the S&P 500, which has, of course, rebound more after the major tech stock rebounded. You can see that year-to-date high, we are looking at 6,920 points. I believe a lot of analysts are targeting that the S&P 500 will hit the 7,000 level by the end of this month, closing the year on a high note. So that is where we are looking at the resistance level around the 6,900 to 7,000 level. That is where we want to hit on the S&P 500 index. We have also rebounded off the 100 days moving average and that low bound of the Bollinger Band. So these are not coincidence, but these are just technical studies that historically these levels do provide support for the major indices. Okay, so with the indicators also showing positive sign, the MACD have a positive reading now. A crossover just happened. This is what we call a golden cross. So that means that it's signaling that we are likely going to see more upside momentum for the S&P 500 index. The RSI reading at 58 points is also a very healthy reading, signaling that there's positive momentum above the 50-point neutral line. So that means that the S&P 500, I believe, will continue to push forward as well, up into the 7,000 region by the end of this month. Lastly, let's move to the tech-heavy Nasdaq Composite Index, which jumped 4.9%. But the key thing to note here is even though the Nasdaq jumped 4.9%, close to 5% last week, for the whole month of November, it is still slightly negative, okay? So that means there is more to catch up on the Nasdaq Composite Index due to the tech valuation concerns last month. But with that being said, okay, we still see that we have crossed above the 20 days and the 50 days moving average. So that now can become a very good sort of a foundation for the Nasdaq Composite Index to build up the momentum to rise up further, with the MACD confirming a positive reading, with the RSI above the 50-point neutral mark, above the 14 days moving average. All these indicators are all pointing up towards a positive week or positive month for the Nasdaq Composite Index. Okay, so with the tech stock, or also known as the growth stocks, being more sensitive to the interest rate decisions, if let's say a rate cut do materialize at the meeting this month, then likely that will give the Nasdaq a lot of push up higher. And that resistance level, we are looking at the upper bound of the Bollinger Band at 23,995 points, or the previous high on the 29th of October. That will be a 24,000 handle. That is where we hope the Nasdaq Composite Index will end towards the end of the year. Support level is still not changed at the 100 days moving average, now at 22,161 points, okay, coinciding with the lower bound of the Bollinger Band at the exact same level. So these are the key levels to watch out for. I think it will be range bound, but we will be testing the year-to-date high again for this month for the major US indices. Okay, so that's all that I have to share. Anything else that we need to look out for, Gerald?
So I think, like I mentioned earlier, it is a quieter week, quieter month for the markets. I hope everyone also takes some time to recharge and rejuvenate as we go into the year end and get ready for 2026.
Yes, and also take the downtime to reassess your portfolio and see how you want to position that for the longer term in 2026. So we'll still continue to update you with any developments in the market, and we hope to see you next week in the next weekly market review. In the meantime, trade safe and stay safe, and we'll see you next week in the next weekly market review. Goodbye.
See you.
See you.